SpaceX is collecting $2.2 billion every single month from two of the most powerful AI companies on the planet, Google and Anthropic. And most investors are completely missing what this actually means for the upcoming IPO. Welcome back to AI Assets, your daily source for the sharpest AI investment intelligence. Let's break this down right now, because this story is bigger than it looks. Google just signed a contract to pay SpaceX $920 million per month, starting October 2026 and running through June 2029. In return, Google gets access to approximately 110,000 Nvidia GPUs, processors, memory, and related components housed in a SpaceX-operated data center. That's nearly $11 billion per year from one customer alone. And that's on top of the Anthropic deal. Last month, we covered how Anthropic, the AI safety company, backed by Amazon and Google, committed to paying SpaceX $1.25 billion every single month through 2029 for full access to the Colossus One data center near Memphis, Tennessee. Add those two contracts together, $2.2 billion. Every month. Locked in. Guaranteed. To put that in perspective, that's more annual recurring revenue than Spotify generated in its entire first 5 years as a public company. Now here's the investor context that matters. SpaceX is targeting a NASDAQ listing this month under the ticker SPCX. The company is aiming for a valuation of $1.8 trillion, potentially the largest IPO in history. Most analysts are valuing SpaceX on Starlink satellite revenue and rocket launch contracts. But these two AI infrastructure deals are an entirely different business. SpaceX has quietly become one of the largest AI compute landlords in the world, and the market is not pricing that in correctly. Think about what these contracts represent. They are not project-based. They are not speculative. They are long-term, fixed-price, guaranteed revenue streams from two of the most cash-rich AI companies on Earth. Google's parent Alphabet alone has over $100 billion in cash on its balance sheet. For investors evaluating the SpaceX IPO, this changes the fundamental story. You are not just buying a rocket company or a satellite internet provider. You are buying a high-margin AI infrastructure business with a $30 billion revenue backlog already signed before the first day of trading. Now here is what the market is missing. Everyone is talking about whether SpaceX is overvalued at $1.8 trillion. Morningstar just published a note saying the valuation looks rich and investors should wait for a post-IPO pullback. But the debate is framed around the wrong business. The traditional rocket and satellite model gets valued like an aerospace company. Low margins, high capital expenditure, long development cycles. That's where the overvaluation concern comes from. But AI compute infrastructure is priced completely differently. CoreWeave, which does almost exactly what SpaceX is now doing with these data centers, traded at over 30 times revenue when it went public. If you apply even half that multiple to SpaceX's locked-in AI revenue alone, the math starts to justify a significant portion of that $1.8 trillion valuation on its own. There is also a strategic angle nobody is discussing. Alphabet already owns approximately 7% of SpaceX after investing $900 million back in 2015. That stake is now worth an estimated $122 billion at the IPO valuation. So Google is simultaneously SpaceX's largest paying customer and one of its largest shareholders. That is an extraordinary alignment of incentives, and it makes Google's $920 million monthly payment look less like an expense and more like an investment in an asset they already own a piece of. So what happens next? And how do you position for it? The SpaceX IPO is expected before the end of June 2026. Watch for the final prospectus filing, which will confirm the exact offer price and share structure. That document will also reveal whether there are additional AI infrastructure contracts beyond Google and Anthropic that haven't been publicly disclosed yet. 3 dates and events to monitor closely. First, the IPO pricing date, expected in the 3rd or 4th week of June. History shows that the largest IPOs in history tend to pop hard on day 1, and then pull back 20 to 40% within the first 3 months as lockup periods approach. If Morningstar's red is correct, patient investors may get a better entry point in September or October. Second, Nvidia's next earnings report on August 25th. SpaceX's AI revenue is entirely dependent on Nvidia GPU availability. Any signal from Jensen Huang about data center supply constraints directly impacts SpaceX's ability to expand these contracts. Third, Anthropic's own IPO, expected in Q4 2026. If Anthropic goes public, its monthly payments to SpaceX become public company obligations, scrutinized by shareholders and analysts every quarter. That brings SpaceX's AI revenue into sharp institutional focus for the first time. The smart positioning play right now, before the IPO, is through publicly traded companies with direct SpaceX exposure. Alphabet's stake alone is worth over $120 billion at current valuations. That means buying Alphabet today gives you indirect SpaceX IPO upside, plus the Google AI platform business, at a combined valuation that looks significantly more reasonable than buying into the IPO directly at peak hype. This is the story Wall Street is telling about SpaceX, a rocket company going public. The story nobody is telling. A company that has quietly signed $30 billion in guaranteed AI infrastructure revenue before it sells a single share to the public. That distinction matters enormously for how you should think about valuation, risk, and timing. If you found today's analysis valuable, subscribe to AI Assets right now. We do this every single day. Cut through the noise, find the angle the market is missing, and give you the investor perspective that actually matters. Drop your thoughts in the comments below. Are you buying SpaceX on IPO day or waiting for the pullback? Let us know. And stay sharp. The AI investment landscape is moving fast, and we'll be here every day to keep you ahead of it.